Good morning, everyone. If everyone can find their places, we shall begin. I've got a few introductions to make. First off, I'll introduce myself. I'm Brian Groff, and I'm co-chair of the SME Resources and Reserves Committee. Very happy to be in here today from Kentucky, and glad all the flights were on time, so pleasure to be here. I'd like to bring up Mr. Hal Quinn, President of the NMA, to make a few welcoming remarks.
Thank you, Brian. Thanks, Brian. Welcome, everybody, to Washington and to the National Mining Association. So we're very glad we could help host the committee's annual general meeting, as well as this session to further some collaboration on reporting requirements. I think it's been a great effort teaming up with SME. I've got to thank the Securities Exchange Commission as well, their team, as well as the commissioners who looked at what we were requesting in terms of modernizing the U.S. system, and they looked at it very seriously. And I think that, from my perspective, it was a very positive outcome. And I think for all of us, we all understand how important it is to have alignment globally as close as possible to give better visibility and instill greater confidence on our reporting, both for the investors, the governments, and the public in general. So with that, I wish you well for the rest of the meeting, for a successful session here, and further efforts on collaboration and alignment on reporting standards. Let me give you just a quick safety share on if there's a occasion that we have to leave the building or evacuate the building. The proper way to go is out these doors, that one or that one. Take your immediate left to go to right out the front glass doors for our lobby, and then take your immediate left right after that. You'll see a water fountain, and there's an exit sign with a stairwell. And you proceed down the stairwell, 5 stories. You'll go out, the building security folks will take you out to the front or direct you out the front of the building. I would ask you to then proceed a half a block to the front or side of what we call the Department of Labor, which is the next big building. That's where we gather, and we'll check on everybody there to make sure we can verify that all our guests and team have been able to make their way out safely without incident. So with that, have a good day. Wish you well on your future endeavors.
Can I remind the speakers to speak up because we're not mic'd up, and also silence yourself.
Yep. Next individual I'd like to bring up is Mr. Hugh Miller of the SME.
Thank you. It's a real pleasure to be here. My name, again, is Hugh Miller. I have the honor of serving as the 2019 president of SME. I'd also like to introduce Dave Carnegie, who's our executive director. Again, it's a distinct pleasure to be here, and we're delighted that there's such great attendance. The society and our diverse constituencies put tremendous importance upon issues of reporting from mineral resources and reserves, and the disclosure of accurate, transparent, and understandable information to shareholders and the investment community. These types of meetings are critically important, and to give interested parties in the mining industry the unique opportunity to communicate directly with representatives of the SEC and the reporting community to discuss concerns and processes associated with the interpretation and implementation of the new rules. I'd like to extend my sincere thanks to the SEC, to National Mining, and all of you for being here. This is, again, a great opportunity to have an exchange of ideas and how we take the next steps forward. Thank you. Thanks.
Next individual I'd like to introduce is Mr. Neil Wells, Chairman of CRIRSCO.
Thank you, Brian. Every year, CRIRSCO holds its annual meeting in one of its member countries. And we can see just here on Ken's slide, you know, our geographical reach is significant and growing all the time. And one of the things that's very important for us, of course, is maintaining alignment between the different reporting codes and standards, which all share the same root. But then there's a national flavor that is introduced to each of those. And obviously through the SME reporting code that directly affects companies reporting reserves and resource estimates for North America, it's very important for the members of CRIRSCO to understand how the specific country listing rules then might affect the reporting requirements and alignment of those codes. So we've just ended our 2.5-day annual meeting here in Washington, just before you all joined us. And now we have the opportunity to take a stock, understand what this means. So thank you very much to SME. Thank you very much to the SEC for allowing us to sit in on your meeting. I'm sure all of our members are going to find this very interesting as well. Thank you.
Thank you, Neil. Next is Mr. Ken Lomberg, who's going to tell us a little bit more about CRIRSCO.
Good morning. My name's Ken Lomberg. I'm the current deputy chairperson of CRIRSCO, about to become chairperson. So what I'd like to do is take you through a very brief summary of CRIRSCO and how CRIRSCO works. So I'm going to be very brief and give you a sort of high level how CRIRSCO works. Brian, I'm not sure how the advancing of the slides is going. Okay, so CRIRSCO is an international organization, and the idea is that it's about public reporting of mineral resources and reserves. It's a required minimum standard for members who report according to CRIRSCO codes, and it is relevant for all solid minerals. On the slide here is what we call our template, which is the basis for all of the reporting codes. The codes are all very similar, and they follow this guideline. We are about to release an update to this template, which was 2013. So there are going to be some small changes and a lot of improvements. This is the reach of CRIRSCO. CRIRSCO includes 14 different jurisdictions. They're not all countries, but they have Australasia and PERC, which is the whole of Europe, and for the rest, they are essentially countries. Each one of them has a national reporting organization which is in charge of their particular code. So they then are aligned with the CRIRSCO way of doing things, and we call it the CRIRSCO family. As I said, it's about reporting and public reporting, but there are important things that we try to emphasize to our members and to people in the industry. We are looking at a depleting asset as opposed to a factory or any other or many other industries where it's not depleting, where it's getting you are getting a bigger situation, and we are making the most critical decisions when we know the least about what we're trying to make the decisions about. So right at the beginning, we have got limited information, but as we progress with the project and with mining, we get more information, and the important thing is that having a way of reporting that can help people who would like to invest so that they can make sensible decisions about where to put their money. And this is important with the clear reporting. Sorry, so it's imperfect knowledge at the beginning when with the extraction, but it's important that we bring a whole lot of disciplines together. There's a lot of technical information, the issues of social, environmental, and the issues of capital and sustainability. CRIRSCO was born out of a very unfortunate situation where there were a number of scandals in the previous century, Two of them were important to remember. One is the Poseidon nickel boom and bust, which was in the 70s. And then the latter one, which you probably all remember a bit better, was the Bre-X affair in 1997. And this bore out the necessity to have a way of reporting that would be there to provide some sort of similarity, and to make sure that there's a way investors can understand what's there and they can make sensible decisions. This little figure we call figure 1, this is the central part of the CRIRSCO way of doing things. On the left are resources, on the right are reserves. And we look at it effectively as a type of risk assessment. So we start right at the top with exploration results, and as we go down, we go from inferred to indicated to measured with increasing geoscientific knowledge, and we go from left to right with adding aspects of what we call modifying factors, and that includes aspects of mines, including mining method, metallurgy, social environment, and of course the economic aspects. And this, depending upon where we categorize a project or a mine, depends on where we would see the risk associated with that particular deposit. There are 15 different terms in CRIRSCO. Each one of them we call our standard definitions. We have a standard definition, and these are identical between all of the codes. And these are the critical ones. I mentioned measured, indicated, and inferred. We've got proved and proved and probable reserves, and these are all defined terms in our codes. They are definitions, but we provide more information in the form of guidance in order to help people who would like to understand better the way in which we are approaching the reporting. The important aspect is that we rely on what we call a competent person. A competent person is a technical person in the mining industry, generally a geologist or a mining engineer, but it does include metallurgists and other engineers who will then take on the responsibility for the declaration. So they will either do the work themselves or supervise the work of others in order to get aspects such as tonnage and grade or quality, and they will then declare that, and they will take personal responsibility for that declaration. The important aspects here are that we want to make sure that these people, firstly, are technically capable, and secondly, that should there be a reason to hold them to account, that we can do so. So the first aspect is we say that they need to have 5 years, minimum of 5 years, relevant experience in the activity that they're performing. So if they're doing a reserve declaration, they need to have the right understanding. If it's a resource declaration, slightly different understanding. And if it's gold or coal or platinum or rare earths, there might also be some special aspects that they will need to know. The other aspect is that they need to belong to a professional organization that has a code of ethics and a disciplinary code. We don't want to discipline people, but we want to make sure that there's a way that we can, should it be necessary. The requirement in these cases is that somebody would pinpoint them to have made a poor report or made a poor declaration, and then the disciplinary process would follow. As I say, this is not desirable, but is an unfortunate necessity. They are required to, when they are preparing competent person's reports, need to exercise judgment, and in many cases there's a lot of judgment required. There are the three important principles that we uphold are transparency, materiality, and competency, and they need to understand that and incorporate that in the way in which they present the declaration. And they need to ensure that it's balanced and that it's a way of communicating what is technical to other people who are maybe not so technical, and they were going to be making these very big decisions of investing in properties and mines. Each NRO, the NROs are related to the code, and each NRO has professional organizations. But what we have arranged, because of the family that we have, is that there is reciprocity between the different codes. So for instance, somebody in Canada can report using the Australian code, or somebody in South Africa can report according to the PERC code, the European code. So there's reciprocity, and the important part there is that the individual doing the reporting belongs to a professional organization that has this code of ethics and the disciplinary code, so that they can be held accountable if necessary. Here is a list of the 14 countries that are members, India being the member that joined approximately 3 weeks ago. So this is a very dynamic situation. I'm not going to read them out. You can see it if you're in the audience, and if you're listening, you will be able to see it on the slide pack. The important part as well, and this is one of the other cornerstones, is that the codes invariably are related to their local stock exchange. We know, I think many of us are aware of the NI 43-101, which is law in Canada. So that's related to the stock exchanges there. We have JORC, the Australian code, is related to the Australian Stock Exchange. The South African, the SAMRAC, is related to Johannesburg Stock Exchange. And so it goes on across the world. Some jurisdictions allow the use of multiple codes, such as the London Stock Exchange. They allow multiple codes to be used. Similarly, Singapore and Hong Kong. So importantly, the bourses are using CRIRSCO-related codes in order to provide the information to the investor and to the shareholders. This is a small graphic, importantly showing that, for instance, in Canada, there are nearly 1,700 different entities, whereas other jurisdictions have less, but it doesn't mean that the code is any different for any of these countries. It just illustrates how many projects or mines rely on the codes in these different jurisdictions. Important aspects that we consider is that the CRIRSCO family promotes best practice. It ensures that there's a common language. Indicated resource under one code or another code are related. In fact, I have no reason why they shouldn't be reported the same. Indicated in one jurisdiction, indicated in another should be identical. So there's common knowledge. That means that an investor looking at, for instance, a proved reserve will understand what it means if it's gold, and they will understand what it means if it's coal. So they will have some way to measure the risks and the various technical aspects associated with it. It's the basis for valuation. The valuation codes use these resource and reserve declarations in order to assist with valuation. It's important that the competent person is one of the keys, the cornerstones of the way in which the codes operate. And these people are then take responsibility for their declarations. NRO, each one has a requirement. I'm not going to go through it in detail, but it is there should you like to see it. But it's important that self-regulation, engagement, consultation, and the reporting standard are aspects. So every code has a code, so they have the code itself, but that's not divorced from the code of ethics and the disciplinary code. And when a new member, a member approaches us to become a member, we make sure that they have the professional organization, which has the code of ethics and disciplinary code, as well as having the code that is aligned within the CRIRSCO family. There's ongoing aspects such as, we've spoken about discipline perhaps too often, but there's important aspects in the membership is developing competent persons who are able then to report according to the codes in their different countries. As I indicated earlier, there's a reciprocity between the professional organizations in the different countries, which allows people from other countries to report under different codes. And this allows a whole lot of a really good communication between the different codes. There is an administrative process, and that is part of what our meeting that we've been having these last few days in Washington is understanding each other and understanding the process and making sure that our codes are administered properly, and that there continues to be this alignment between the different codes. Thank you very much for your attention.
Good morning. I'm Don Hulse. I'm one of the co-chairmen of the SME Resource and Reserve Committee. I want to offer my thanks again to the SEC and welcome. The SME Resource and Reserve Committee has worked for nearly 30 years, working on being part of the CRIRSCO family, adopting the CRIRSCO codes, and sending missives to the Securities Exchange Commission about how we would like to see things changing from past practice. We have now achieved that. Thank you very much. In short, in 1981, disclosure guides were updated to a Form S18, and in 1992, S18 was reissued as Industry Guide 7, which has been the law of the land as far as reporting mineral reserves since that time. Mineral resources were not recognized in the United States. Also in 1992, the SME prepared their first guide to reporting mineral resources and reserves, which reflected the CRIRSCO message. From 23 to 2018, we have advocated for this reporting, and in November of 2018, the final rule for regulation SK-1300 was issued, and we have all been running around madly since trying to understand how we're going to deal with it. Brian? So this leaves us in an interesting position, because now we have the rule and the SME guide are close related but not identical documents, and all registered mining companies in the US now have, well, about a year and a half, a little more than, not quite a year and a half, to begin complying with the new rules. So in service to the industry, the SME and our committee has decided first objective is analyze the comparison of the SME guide and the new rule, and try to describe how that can be most effectively used by U.S. registrants to report their reserves, completing the process in January of 2021. So first is to offer guidance on what the current status quo is. Part two is communicate on a regular basis with the SEC to be sure that as this develops and the fine details are worked out, that we all understand each other and we have a common understanding, so that the industry and the government are correctly reflecting each other in how this is going to be presented. We are working on documents to provide guidance, and as these documents get advanced, we will probably look at a new review or new revision of the SME guide, which will incorporate the details of SK-1300 and show how that they are applied under the SME guide to produce reports that are suitable for public filing. Brian? So every year we have periodic meetings of the SME Resource and Reserve Committee. During the February meeting held at the annual SME convention in Denver, we developed a number of subcommittees to provide some of this guidance, focused on 6 key points: confidentiality, liability of the qualified persons, materiality, marketing, other studies needed, and internal controls in the reports. These committees have been working and have some initial drafts of their guidance documents. Did we have a bit of an example of one, Brian?
No, not yet.
No? Okay. So we now have draft guidance documents, which we are now going to pass around amongst the Resource and Reserve Committee for critical review, with an aim to start issuing these publicly and making them available on the SME website by the end of the calendar year. These may take the form of best practice. Some of the subcommittees have already started the drafting as advisory bulletins, which provide the necessary detail to move forward. Is that it?
That's it.
And we will formalize the format of these to try to make them easy to use, clear, concise, and definitive, to make this whole transition process as painless as possible. Thanks very much.
All right, next on our agenda is our panel discussion with the Securities and Exchange Commission, who we've got some representatives from. I'd like to introduce Mr. Brad Skinner to come up and say a few words. Did you have a presentation?
There's a slide deck you should have. I hope. Senator Tyler.
Send it to you.
I don't think so. I should send it to Kate. I don't know where it's going.
That would be it. You got it? Do you have it?
Yeah, throw it.
This is how fancy we are.
Sneakerhead.
Just the backup plan. That's right.
Hopefully this is not a draft. Excellent. Can you click to the next slide? Yeah. All right. Thank you, everybody, for inviting us over. We're glad to be here. My name is Brad Skinner. I'm the Senior Assistant Chief Accountant in the Natural Resources Group at the SEC. With me today, on your left, Ken Schuler, a mining engineer, and also John Coleman, also a mining engineer. Going to talk about a variety of things today, but before we get started, if you could back up one, please. Our disclaimer, we make this disclaimer every time we appear anywhere. The Securities and Exchange Commission, as a matter of policy, disclaims responsibility for any private publication or statement by any of its employees. The views expressed herein are those of the authors, myself, Ken and John only, and do not necessarily reflect the views of the Commissioner, and this wording is a little out of date, the Commissioner, the Commission, any of the Commissioners, or any other staff of the SEC. These are purely our personal observations. With that, before we jump into the details, I want to first thank everybody for having us here today. We appreciate the opportunity to speak with you. I hope that this is a continuation of a process, a dialogue that lets folks work through what I'll call the implementation aspects of adopting new disclosure rules for purposes of reporting with the SEC. There was a moment ago, there was a discussion about the timeline. You know, at one level, it looks like, boy, there's a lot of time here. We don't have to do anything. If I'm a calendar year company, it's not till 12/31/2001 that I had to report this stuff. And that's not until sometime in 2022. I would caution you that that time will go by very, very quickly. I encourage everybody to take the time and start working through the details of how you will do this now. There are budget implications, there are internal control implications, there are reporting. There's so many different things that get touched here. And from our perspective, To the extent that you find questions that you want us to help with, we have a process that we go through that can be time consuming, especially, and we'll talk about this more later, there are methods through which we can give informal advice, and that can be fairly quick. But as far as getting formal answers from us, things that you can actually rely on as part of preparing your documents, that takes time. And in order for us to have enough time for us to do our work, and then for you to be able to take that back and do what you need to do with it, those questions need to come up sooner rather than later. Speaking of questions, we've gotten a variety of questions submitted to us beforehand. Some of those questions will probably be addressed in our presentation. Many of those will not be addressed. So if you submitted a question that's not getting answered, it's not being ignored. It's just we consider this not to be a suitable forum for answering some of those questions. What we will be doing is taking those questions and considering them as part of an evaluation about whether we need to provide any possible additional rulemaking or interpretive guidance, other methods of clarifying how these rules are meant to be applied. I was involved in the oil and gas modernization project about 10 years ago, very closely involved in that. And a couple lessons I learned are, one, no matter how carefully you think you wrote a rule and how carefully you thought about it, you messed something up. You missed a detail, you didn't think through some permutation of it, and those things only turn up when people get a chance to actually start figuring out the nuts and bolts of applying it. The other thing is, and I touched on this a moment ago, is getting guidance out of us takes time. So the sooner we learn about things, the sooner we can respond to that. Going back again to the oil and gas modernization, the rules were issued at the end of 2008. They were effective for companies effectively the end of 2009, so a shorter lead time than what we have now. But in the interim, we had received enough questions, some of which had a common thread, that we were able to issue what we call compliance and disclosure interpretations. The commission issues those, or the division issues those in a variety of circumstances, and what they represent is our view. They're not rules, but they represent our views on how our rules should be implemented. Those can be very helpful. I don't know that that's what will happen in this case, but I could certainly foresee a situation where as time passes, we identify areas where there's a sufficient commonality of concern that, hey, we should address this through some method. Okay, with that as some background, let's jump into the details of our slides. I'm going to talk about a couple different things here. We're going to talk briefly about the SEC and its overall role. We're going to talk about the Division of Corporation Finance, what we do, how we fit into the SEC's overall role. We're going to talk a bit about the comment process. Then I will turn it over to Ken, who's going to walk through some of the details of SK-1300. If you could bump back one slide, I want to touch on this. So some of the CRIRSCO remarks talked about capital formation. The SEC's mission, stated briefly, to protect investors, to maintain fair, orderly, and efficient markets, and to facilitate capital formation. And I would argue that there's not a significance to the order in which those things appear. Those are all very closely related things. If you don't protect investors, you can't raise capital. If you don't have efficient markets, you can't raise capital. So these things all work together. The commission includes 5 commissioners. So for the first time in quite a while, we have a full slate of commissioners. It's been something less than that for a number of years. 2019, the most recent commissioner got appointed. We now have a full slate of 5 commissioners. So this slide has a lot of detail. It doesn't really matter, but it lays out some of the structure of the SEC and how we go about achieving the goals that we talked about earlier, achieving our mission. We have a variety of regional offices around the country. We have a variety of divisions and offices that do a variety of things. We work in the Division of Corporation Finance, and that is the division that most public companies will have most of their interaction with. That's the sort of communication point between the SEC and public companies. Some of the legislation that impacts what we do is listed here. I won't go through all these rules in any detail. You could spend hours doing that. But I will just highlight the Securities Act of 1933, the Exchange Act of 1934, and the Dodd-Frank Reform of 2002 are all the things that, for the most part, as we go through our day-to-day work and the things that public companies do, those are the piece of legislation that most directly impact that activity. So we spend the majority of our time working with those 3 pieces of legislation. Speaking of legislation, I wanted to touch on an item that's going to sort of flows through much of what we're going to talk about today, at least indirectly, and that has to do with individual accountability. And I think CRIRSCO talked about this as well. In 2001, we issued a reminder to folks that pointed out that professionals engaged in the practice of reserve estimation face potential liability under the Securities Act for their work, to paraphrase things. And that potential liability extends to experts, which can include accountants, attorneys, engineers, or appraisers. So for people who are involved in estimating reserves in documents filed with us, there's meaningful liability associated with that. So we caution people to make sure they understand the rules that they're applying, that they're following the appropriate procedures for applying those rules. Working now, so we talked about the SEC overall. We're in the Division of Corporation Finance. I want to talk briefly about the things that we do. I think you could summarize our activities into 4 basic buckets. The first is we seek to ensure that investors are provided with material information in order to make informed investment decisions. Do they have what they need to know? Do they have it when they need it? Secondly, we provide interpretive assistance with respect to SEC rules and forms. We can provide that interpretive assistance to companies. We provide it to the commission. We provide it to others in the staff. We provide it to others on the outside. So you can view this as part of that process. You know, how do we get information out about how we view the application of our rules? We make recommendations to the commission regarding new rules and potential revisions to existing rules. We were certainly involved very closely in the process that led to the SK-1300 rules. That's part of our ongoing work. And then finally, and the thing that takes up the majority of our time, we're engaged in filing reviews. That is, we review documents filed by public companies. The division structure. Disclosure operations is the largest piece of it, and it's a staff of accountants, attorneys, engineers, and financial analysts that are organized into industry-specific groups, and that's the vehicle through which we conduct our filing reviews. To support those activities, we have a variety of support offices, and I won't go through all of those. I will point out the Office of the Chief Accountant, and we'll talk about, so the division has an Office of the Chief Accountant. There is also an Office of the Chief Accountant for the commission overall, and I think that can be confusing to people at times. So there are 2 different Offices of the Chief Accountant as it relates to accounting activities. There are other Offices of the Chief Accountant in enforcement, so that's a title you see a lot. It's going to matter in a few minutes when I talk about communicating with the staff. We'll get to that in a second. Filing subject to review. What do we review? The majority of our time is spent reviewing annual reports and other periodic and current reports filed by companies. We select those filings through a non-public screening criteria. We pick things based on reasons that we don't explain. We also select them based on Sarbanes-Oxley requirements. We are required by law to review public companies at least once every 3 years. We have a variety of criteria that we use to review companies more often on a selective basis. We review IPOs, the initial public offerings of virtually every company. Virtually every IPO gets reviewed. That's one of our sort of threshold things. If you come in with an IPO, we're going to look at that. We look at other registration statements, repeat offerings by companies. An existing company comes in with an S3 to register additional shares, or they're conducting a merger and they submit a proxy. We can look at those. Annual reports are touched on. That falls under the Sarbanes-Oxley idea. We look at proxy statements, and we will look at disclosures under item 401 and 402 of 8K. Item 401 has to do with changes in accountants. Item 402 has to do with non-reliance on previously issued financial statements. Our filing review process often ends in no comments being issued. So a company may not know that we've reviewed them. It's entirely possible we could review a company many years in a row without them ever knowing it, because if we don't have any comments, you don't know what we've done. However, many of our reviews do end up in comments. Those comments can take a variety of different forms. They can be going after a variety of different things. Probably the most frequent comment is a request for additional supplemental information. We want to understand something about what's going on with disclosure we saw. Perhaps it's not clear to us. Perhaps we don't understand the basis in the accounting or disclosure rules for what's done. We want to understand more about that. We may issue comments that ask for additional or different disclosure in future filings. We issue a comment that says, in the future, please add this disclosure or revise this disclosure. We may issue comments that direct companies to amend their filings to file revised financial statements or disclosure. And then finally, at the end of a comment process, we will send a no further comment letter. Basically, that lets the company and, importantly, the public know that our comment process has ended. We publicly release comment letters not sooner than 20 days after the end of a comment process. So once those letters are made public, we believe the completion review letter is an important vehicle for letting people know, okay, that review's ended and we've seen what there is to see. I want to talk a bit about what we call best practices for resolving issues. Now, this is more appropriate for, of course, for public companies than it is for some of the folks here who have a slightly different role in the process. The first thing that I find is helpful is that companies prepare thorough responses. Many times our comments will ask for or address several different things in that comment. All too often we see comments or responses rather that address part of what we ask for and not all of what we ask for. And that leaves us in the position of wondering, was that an omission? Did they just forget? Did they miss it? Do they think it's unimportant? Or are they purposely not answering that question because they don't want to? And it leaves us guessing. Very helpful to make sure that a response addresses everything in a comment. Do not automatically assume that we disagree with your accounting or your disclosure. The fact that we're asking something might just mean we want to know more about it. Companies, preparers know far more about the information in the document than we do, so we're often just trying to understand something. It doesn't mean we're starting out saying, oh, this is wrong, fix it. So there's not necessarily need to be defensive, rather explain what's going on so we can work through it. Key your response to your initial comment. Make sure that when you write a response to us that we understand how it fits into what we asked. If you are indicating that you are going to make revisions in the future, indicate specifically where those revisions will be made, or if you've submitted a document that's revised, indicate where those revisions were made. You know, a document that's 500 pages that you added 3 new sentences to, if you don't tell us where that is, we're going to have a hard time finding it. To the extent that we ask for support for either your accounting or your disclosure, please provide supporting authoritative reference. You know, how is it that you arrived at the answer you did? Let us see your thought process so we can understand the basis for it. Our comment letters request that you respond within 10 business days. If you're not able to do that, we request that you tell us when you can. Submit an additional request that says, we got your letter, we can't respond in 10 days, but we will be able to respond within 20 or 30. We understand that our comment letters often sort of drop in unexpectedly out of the sky, and it may not match up with the timing of preparing a 10K report or closing a quarter or a number of other things. We recognize that, but we do like to understand when companies will respond. Finally, at the end of a comment process, companies should understand they need to furnish all that information on EDGAR. There are vehicles through which certain aspects of responses you can request confidential treatment for, but for the most part, responses and any supplemental information that's provided needs to be provided on EDGAR. Next, please. Contacting the staff. All right, so we talked a bit ago about that hopefully this will be part of a communication process. To get informal answers from us, particularly, or for example, on this the SK-1300 issues, I've got up here numbers for John, for Ken. Please feel free to call them. If you really feel like you need to call me, you can do that too. We can provide informal answers on things, and we can also, it gives us a vehicle for understanding what questions are coming up for people. You know, what are people running into? Any questions or any answers we provide are, much like my remarks today, would represent informal views, our thoughts. They're based on experience, they're based on knowledge, but they're not formal. They're not necessarily something you can rely on, but they might help inform your thoughts about how you should approach a problem. For formal answers to things, we have a place on our website where you can furnish requests for formal guidance. And I want to circle back to we mentioned earlier that there's a chief accountant's office for the commission, and then a chief accountant's office for the division. We handle different types of questions. So depending on what your question is, that would be directed to different offices. And our website helps walk through that. You know, if you have a question about accounting specific things, the application of GAAP, those go to the commission's office, the chief accountant. If you have questions about the content of information being put in a form, for example, how do I comply with 1301 of SK? Those are questions that the division answers. So our website helps walk through that. But importantly, if you send a question to the wrong place, or if you're not sure, you reach out. We get that around to where it needs to go. But just understand that depending on the nature of your question, you might need to go somewhere different to get that answer. And again, important to understand the difference between formal and informal guidance. Informal guidance we can provide fairly quickly. Formal answers take more time. As you can imagine, we have a process through which we develop answers and vet them and think about them, and that takes time. That concludes the remarks that I wanted to provide on the sort of structure of the SEC and how the division works. What I'd like to do now is ask Ken to come up, and he's going to walk through some of the details of 1300, which I think is of probably the greatest interest to everybody. So thank you for the time, and with that, Ken.
Thank you, Brad. You're going to just continue. Okay. Little organizational here. The final rules for the modernization of property disclosure for mining registrants was approved in October 2018. It became effective February 2019. The delay was primarily due to the government shutdown. The timeline for the final rules was essentially October 2012. The SME submitted a petition for a revision of the Industry Guide 7. In February 2015, the SEC announced the appointment of Dr. Awa Afi as an academic fellow whose primary function was to work on the revision of these rules. The proposed release was published in June 2016 with a comment period ending in October of 2016. This was extended till September at the request of the mining industry. Slide 14. Okay. The modernization project revised the disclosure requirements that were moved to Regulation SK, similar to oil and gas, which was SK-1300. And these are now a rule rather than an industry guide, so they have much more effect on the individual companies. Modernization effort added clarity to the disclosure and was changed to a principle-based materiality standard. The modernization project is also aligned with international standards, which limits compliance costs and burdens for our individual companies. It also improves investor understanding of mining operations and advances investors' protection, which is part of our mission statement. Modernization effort promotes competition and capital formation and levels the playing field between the domestic and foreign filers. Regulation SK establishes the reporting requirements for our SEC filers, and the new mining disclosure rules do not affect multi-jurisdictional disclosure systems or MJDS filers or those filers that file a 40F. They will continue to report as previously with no change. Our rules are organized in a fairly straightforward manner, starting out with 1300 and then going through 1305. Item 102 refers mining registrants to SK items 1300 through 1305. And subpart 1300 includes definitions, general instructions, information on qualified persons, technical report summaries, technical studies, summary disclosure, individual property disclosure, and internal controls. And again, the new mining rules do not affect the multi-jurisdictional disclosure system filers or the 40F filers. They remain unchanged. Item 1300 provides many definitions to mining disclosure. The most significant ones were the qualified person, resources, reserves, classifications of feasibility studies for technical studies, and the mining stages by property and issuer. Under Industry Guide 7, there was no requirement that a qualified person prepare reserves or prepare public disclosure regarding mining properties. Industry Guide 7 only required the disclosure of the person making the reserve estimate and the nature of their relationship to the registrant. However, in many cases, the registrant did not name the responsible party and assumed liability for their work. Under Subpart 1300, the disclosure of exploration results, mineral resources, or mineral reserves must be based on and accurately reflect information and supporting documentation prepared by a qualified person. The QP's qualifications are 5 years experience and being member in good standing of a recognized professional organization or RPO. The RPOs admit eligible members primarily on the basis of their academic qualifications and experience. And the RPOs also require members to comply with professional standards of competence and ethics and have the ability to impose disciplinary action. They also provide a public list of members in good standings. And all of these requirements must be met to be in compliance. Resources. Okay. Under Subpart 1300, resource disclosure is now allowed. This was not allowed under Industry Guide 7. The mineral resource is an occurrence of economic interest in or on the Earth's crust in such form, grade, and quantity that there are reasonable prospects for economic extraction. It is a reasonable estimate of mineralization taking into account relevant factors such as the cutoff grade, likely mining dimensions, location, continuity, and with assumed and justifiable technical economic conditions is likely to become economically extractable. A resource is not merely an inventory of all mineralization that has been drilled and sampled. An initial assessment provides the economic basis for the resource disclosure. Reserves. With resource disclosure, reserves are now defined to international standards. Proven and probable reserves are only derived from measured and indicated resources and are the only economically mineable portion of these resources. The reserve estimate includes diluting materials and allowances for losses that may occur when the material is mined. The economically mineable portion is determined by the pre-feasibility study or a final feasibility study. An initial assessment is a brief study that evaluates the economic prospects of the mineral deposit. It's a preliminary technical study of the economic potential and supports the disclosure of mineral resources. The initial assessment must be prepared by a qualified person and must include appropriate assessments of reasonably assumed technical and economic factors, demonstrating reasonable prospects of economic extraction. A cutoff grade calculation is required, and an initial assessment may also include an economic analysis. Pricing that is used must be reasonable and justified. An initial assessment is required for disclosure of mineral resources, and cannot be used as a basis for disclosure of mineral reserves. Subpart 1300 also defines the different feasibility studies and the estimated levels of accuracy associated with them. The reserve prices that are used must be reasonable. The pricing must be disclosed, discussed with particularity, and disclosed with a justification. Prospective or future pricing is allowed with justification. Royalty companies are also addressed by 1300. Disclosure by the royalty companies is required for the material properties to the extent the property information is known or available to the royalty companies. At this point, we're out of the definition section, moving into just general instructions. Under 1301, the registrant determines materiality based on quantitative and qualitative factors for all commodities produced and sold. Materiality encompasses the entire mining processing operation to the point of material sales. The technical report should incorporate plain English principles and include a glossary for technical terms. Subpart 1302, the registrant is responsible for evaluating the QP's qualifications, evaluating the RPO membership, filing the technical report, and filing consents. The QP may include third-party specialist summary information, but may not use a disclaimer. A consent is not required for the third-party information. The QP may also indicate that information that has been provided by the registrant. Exploration targets must include a prominent statements regarding the conceptual tonnage and grade ranges, state there is insufficient exploration to estimate a resource, and provide an explanation of the process used to develop these resource ranges. The initial assessment pricing must be disclosed and discussed with particularity, stating the method by which the price was selected with all material assumptions. Inferred resources may be included in the cash flow analysis for an initial assessment, but inferred resources may not be used in a pre-feasibility or a feasibility study. (1303) provides guidance on the summary overview that the company or for the company or the registrant's properties. This just basically gives you just an overview of the entire company rather than a piecemeal approach. It describes and summarizes the entire company. It provides locations of the operations and other assets. Royalty companies are allowed certain exceptions due to the informational access. However, they must identify the missing information and explain why this information is unavailable. They are not required to prepare a technical report and may use the technical report that has been prepared by the operating company. Otherwise, royalty companies have the same requirements as operating companies. Once the summary has been completed, you move down and describe your individual material properties. If no single property is material, only the summary disclosure is required. The individual property disclosure provides a property map and property description, separate tables showing the reserve and resource estimates, summarized changes to these resource estimates from previously filed statements. All material assumptions are required to be concurrent. material exploration results are required to be disclosed. Exploration targets may be disclosed in a separate section, and the royalty company exception also applies for individual properties. (1305), the internal control disclosure. It requires the description of internal controls used in exploration and estimates of reserves and resources. For example, this would be the quality control or quality assurance programs that the company has in place. However, this is a new item. There was no comparable section in Industry Guide 7, but many of the registrants had provided this information in the past. The new mining rules include a technical report requirement that is located in Regulation SK Exhibits, Item 601B96. And I apologize, but the attorneys got hold of this. We did not have a requirement in Industry Guide 7 for a technical report. In fact, Industry Guide 7 prohibited that. The technical report summary is prepared by a QP and is required for material properties and supports the disclosure of resources and reserves. A technical report summary for exploration is optional. Inferred resources may be included in the economics of an initial assessment, but not in a pre-feasibility or feasibility study. A technical report summary must be signed by a QP or multiple QPs. And the QP may rely on information provided by a third-party specialist, such as an attorney, appraiser, or a consultant. But it's important to note that the QP may not disclaim responsibility for the work of the third-party specialist. Section 11, QP liability. Items provided by the registrant do not incur expert liability on the QP. And disclaimers are not allowed in the technical report summary. There is a 2-year transition period and early adoption is permitted, provided that filing is in full compliance with SK-1300. The transition guidance for annual reports is clear and applies to the first fiscal year beginning on or after 1/1/2001. For a calendar year company, the first annual report would be the year ended 12/31/21. The transition guidance for registration statements can be interpreted in different ways, and we're aware of this and considering what, if any, additional guidance would be appropriate. And that may occur in the CD&Is that Brad was alluding to. The new disclosure requirements of SK-1300 do not apply to Forms 10Q or 8K, as they do not require property disclosure. If these filings are incorporated into a registration statement during 2021, this could become a more complicated issue. And with that, I'm pretty much complete.
Okay, that wraps up the SEC's formal presentation, but we've got a few topics that we've supplied some questions to ahead of time, and I think this is an opportunity for the SEC to discuss some of them. I know one of the issues that has been expressed in the community are questions about QP liability, in particular if employed by the registrant. Did any of y'all want to comment on that?
I don't think at this point there's much we can say about that.
Yeah.
Thank you. It's been pointed out that I need to speak to the microphone. So this is Brad Skinner. We're aware of the questions surrounding QP liability. There's nothing at this point that we're prepared to say about that. I would direct people at this point to read the rule, read the adopting release. I think there's a lot of information there about thought processes that went to various aspects of it. As we get questions on this, I expect that we may have additional guidance that we put out. I don't know that. It's too early in the process, but these are questions that have come up in enough different ways that it won't surprise me if we provide additional guidance. But at this point, there's nothing that we can say on that.
Brad, can you refer us? There are other expert liability sections in the code. Can you refer us to where we might find some of those in reference to this?
So the question was for people listening in, is there any place that I can refer to elsewhere in our rules that talk about liability? I'm going to take the easy answer and say there are other areas out there, but I'm not an attorney. So I have learned over the years to kind of stay in my lane on things like this. I'm an accountant by training. So I think you can look to outside counsel, or again, that might be a question you want to direct to us so that we can circulate it around to others who might be more qualified to speak to that.
I have a note on my agenda here that this is an opportunity for the SEC to get some feedback on some of these issues. Some of the areas that they want feedback are, and I'll go topic by topic, but one is the level of detail required of market studies. And can you give a sense of what kind of feedback, Brad, that you're wanting from industry on that?
Well, this goes to, and Ken or John might have additional things to say about this. I think this goes back to some of the remarks we made at the outset, which is as people get into the details of assembling this disclosure and thinking about how it fits into the overall disclosure in their document, they need to make judgments about levels of detail, about what are material properties. There are a variety of judgments that need to be made. As you go through those, I think many companies might come up with what are legitimate questions. Boy, we're not sure how to balance the need for clarity and concise disclosure against detail. I mean, that's one of the things that we wrestle with on our end routinely. If you get a document that's 700 or 800 pages long, do you start to get a bit of an overload there? Is there too much detail? Conversely, if things are overly summarized, do you miss the granularity that's necessary to make an informed decision? As companies start to work through those things, that's the type of question we're interested in hearing. It's too early at this point for us to speculate about what might be right in one case versus another, but we do recognize those are the types of implementation questions that people are going to have. The answers to those questions are going to be very much facts and circumstances specific. There are companies that are exclusively focused on one or a very narrow set of operations. There are others that have much broader operations, including non-mining activities. So that to have a rule that fits all those requires some flexibility, requires a principles-based approach, but then leaves some judgments about, okay, well, how do these rules apply to my particular circumstances? It takes those judgments and puts them on the preparers. And as those questions come up, we'd be very interested in hearing them. And again, repeating something else I said before, hearing them sooner rather than later is really crucial. These documents take a long time to prepare. You have a lead time in terms of audit committees, auditors, attorneys, engineers, specialists. There's so many people that have to touch these things to work from a draft document through a final document that's ready to be filed, that needs to happen sooner rather than later.
One of the topics that I have on our agenda is a discussion of the various forms governed by SK-1300, which we obviously have the technical report summary, 601B96, but how does that play in with 10Ks and other filings that a registrant may submit?
Ken or John might be able to clarify this for us. I think typically you're looking at the annual report environment, 10Ks and 20Fs. As Ken mentioned earlier, MJDS filers are not subject to the 1300 disclosure, so that takes the 40F filers off the table. And then you have registration statements, whether those are domestic forms, S1s, S3s, S4s, or the foreign equivalents. Those disclosures also apply there. to touch on something Ken said earlier, we recognize that there are possible different interpretations on how the disclosure requirements relate to registration statements. The wording in the release there is maybe not as clear as you might like. We're aware of that. We're thinking about what to do on that. On the annual report side, it seems fairly clear. It's for fiscal years beginning on or after 1/1/21. So if you're a calendar year company, that's 12/31/21. That there doesn't seem to be a whole lot of question about that. Voluntary compliance is allowed. If people want to just follow that earlier, they can. Our website discusses the fact that right now Edgar is not set up to accept it. Ken had a reference to where the report needs to be attached. We have guidance that says you can attach it somewhere else. There's a different exhibit that you can use for people who are filing, frankly, if they were to do so in the next few weeks. And I say that because Edgar, I understand that Edgar is going to be modified by the end of this month so that it will accept the SK-1300 disclosures in the way that's intended by the rule. So people can start doing that on a voluntary basis more quickly. We did talk about, and Ken mentioned, 10 Qs and 8 Ks, and then 6 Ks for foreign filers. The SK-1300 rules do not apply to those. So if a company were to provide voluntary disclosure about properties in those documents, it wouldn't be subject to 1300. Where that could become complicated, if one of those documents was then later incorporated into a registration statement, then you might get into a complicated nexus between, okay, something that was originally filed as a voluntary disclosure, not subject to the rule, now it's been incorporated into a registration statement that may be subject to the rule. How do you sort those out? I think that's a case where if a company thinks like it might be facing those circumstances, they'll want to contact us about that because we recognize there's not a clear answer to how that works.
Of great discussion in our community has been the topics of materiality and confidentiality. And with respect to materiality, the most common question is okay, when do I have to go to individual disclosure and do a technical report summary? And the paradigm might be different for a gold producer such as Newmont and aggregates companies such as Vulcan. Do you have any comments on materiality and clarifying on how they need to summarize or individually report to properties?
I think what I would say there is that the rule doesn't include any new definition of materiality. Materiality is materiality. There are, you can have endless debate about what's material and what's not. It's a judgment call that companies have to make. What you pointed out, what might be material for a gold company may be different than someone who's involved in some other areas of mining activity. Because it's a somewhat vague concept, and because it's very much facts and circumstances driven, it's a prime area, and if companies are wrestling through that and they're not sure where to land on a decision about what's material and what's not, they should reach out to us. We can't replace our judgment for yours. We're not going to tell you most likely that this is or is not material. What we can do is provide guidance about how we think you should think about it. And our questions will often point to what we think are shortcomings in a thought process. It's common for us to continue to question conclusions about materiality if we're not sure we understand how that decision was arrived at. But ultimately, it's the company's responsibility to decide what's material and what they need to disclose.
And so in our discussion today, I think the message is that the registrants and anybody can contact you, and I've put the contact information back on our screen that is in our SEC presentation. So if anybody wants to get clarification, those are the numbers, and certainly there's a process for formally requesting guidance as well. Another topic that's come up is confidentiality, and it's a significant topic because some registrants will have information required to be disclosed under 601B96, but disclosure of that information may cause competitive harm to the registrant's business. What advice or comments can you make on confidentiality for registrants who have sensitive information?
I guess a couple of thoughts that come to mind. First, I was not involved in the rulemaking process this time around on this. My involvement is coming along afterwards. So some of the internal deliberations and some of the response we received to requests for comments, I don't at this point know all the details of. I guess I would make the general observation that when our rules require disclosure, it's rare for us to make an exception based on confidentiality with the idea that that was considered as part of the rulemaking process. There are methods through which companies can request confidential treatment for information, and a company is certainly welcome to ask if they could get an exception for confidentiality for disclosure, whether it's in response to comments for us or disclosure requirements. But I think as a general rule, when we have things that are required to be disclosed, and I'm thinking, for example, we have a disclosure requirement not specific to mining companies that it's under SK that requires the disclosure of a customer who represents 10% or more of the business in a segment or for an overall company if the loss of that customer would be material. And we have routinely gotten responses to questions about that says, that's confidential. We can't disclose the name of that customer because we think that's confidential. And we don't find that to be a persuasive argument. The rulemaking process includes a deliberation process that takes, among other things, that confidentiality notice into account. And if you, as part of weighing the pros and cons of any particular disclosure, if the conclusion was that the confidentiality aspect does not outweigh the investor interest aspect, then that's the side that decision lands on. Ken or John, anything that you'd correct or amend or add to that?
Not at this point.
Okay, they're going to let me just be on my own on that one. Thank you.
Are there any questions from our live audience that any of y'all wish to have some comment from the SEC on?
I can repeat it if you would like.
Okay.
Yeah.
One question that's come up in a number of discussions is on the implementation of the rule. Given there's a year and a half, 2-year period there, is to whether a company can still disclose under Industry Guide 7 for some properties and disclose under SK-1300 for other properties, or do they have to switch in one fell swoop from the old rule to the new one?
The question is, if you're electing an early adoption, can you disclose some of your information under Guide 7 and some of your information under the new rules? I'm going to defer to Ken or John on that. I don't know the answer. I don't know. I have an idea, but...
You're trying to rope me up here, huh? For the early adopters, you're required to fully comply with SK-1300. We do not allow people to mix and match the requirements as they provide the disclosure. So you can stick with Industry Guide 7 up to the last minute if you so desire, or you can adopt early, but if you do, it must be fully compliant at that point.
Thank you.
Are you trading me out?
I'm trying to.
Any other questions? Now, I know there's a lot of questions in this audience, so don't be timid. I guarantee they won't bite. I know we have some that were early submitted. I'm going to try and pull up here.
Now, on that point, we've gone through those, and the ones that we were comfortable addressing, we did in our remarks, and the rest we think would be great for information.
Okay. So Brad just said that they have reviewed the questions that were submitted to the SME Reserves Committee, and we forwarded to the SEC. and they feel that they've addressed what they can address during the presentation here. And any other questions, we'll have to contact the SEC directly.
And I did have a lot of questions beforehand, but actually that was really informative.
But on that, just to expand on that last point, the questions that we received that we've not answered is not meant to suggest that they're not valid questions or important questions or things that we'll think about and take into our process as we move forward. It's just meant to suggest or indicate that in this particular form at this time, they're not the right things to answer. That might be because we're not prepared to answer them in terms of not having an answer. It might be because they're very facts and circumstances specific and would make sense for one person but not others. There's a variety of things that we think about as we consider questions. So I want folks who submitted questions that didn't get an answer should understand that they're not being ignored. They're just not being addressed at this time in this forum.
So, just in relation to those questions that submitted that weren't answered, will you be coming back to those individuals that submitted those questions, or will we be required to resubmit it as an individual, given that we've aggregated them through the SME?
So the question is, for people who submitted questions that didn't get answers, will we respond to them in some other fashion at some other time, or should they resubmit those? And I think I would answer that by saying, to the extent that companies want a formal answer or want something from us specific to their circumstances, they should ask us directly. It can be an informal question to us, or it can be a formal question. Having said that, to the extent that we see themes in those questions, they may be addressed in some fashion independent of any communication with a specific party. So if we've gotten the same question from 4 or 5 different people, we may think about what sort of interpretive guidance we can provide, and that may come out without any necessarily any further communication with the folks that submitted that question. Anybody else? Thank you. You started with a remark. I didn't want to cut you off.
Oh, no, I had quite a few questions from the technical side, but you guys answered pretty well everything.
Brad, are there questions that the SEC have for the community of registrants and CRIRSCO and even SME that would help in coming up with responses to some of the questions that we're expecting down the road?
I wouldn't say there's anything specific right now in terms of questions, but at the risk of repeating myself again, I would just encourage companies to get in and start doing the blocking and tackling of figuring out the approach to these disclosures so that questions can be identified, issues, complications, unforeseen results, those types of things can be identified in time to get thoughtful, meaningful guidance to the extent it's necessary back to preparers in time that they can work that in. That the time is going to go by very quickly. For accountants in the room or people involved in accounting disclosure, a couple of years ago, both the IFRS and the FASB adopted a new revenue recognition standard. And when it first came out, it was a long lead time. And we got lots of time to worry about this. Well, when that time elapsed, and as we got down towards crunch time, there were many companies that found themselves short of time to finish the work they needed to do. And I think this is a similar thing. The disclosures here are of a fundamental nature such that you want to get it right. You want to get it right the first time. And to do that requires advanced work. And to the extent that you find questions, pass them along to us. We're interested in helping make this as smooth as possible. We're regulators. We have a specific role here, but part of that includes helping people understand the disclosure requirements and how to apply them.
Don Hulse again. Had a meeting with a registrant about 2 weeks ago concerning working on a technical report summary for them. One of their responses was we suggested they might want to start this in November, December, publishing the summary in February or March of next year. And their response was, we believe that we might be better served by starting it in March or April of next year and filing it right at the end when everybody comes in, because we feel we might get extra scrutiny by filing it early. Could you make a comment about? I think you've answered that.
No, I can't.
And I brought up the question specifically because I believe there are probably a number of registrants out there who are feeling exactly the same way.
We just, we don't comment on our comment or our review process as a matter of policy. And I hope people can understand that. And I'll just leave it at that. We understand that this is something new, and there are challenges with that. We recognize that. To the extent that companies think that this is good disclosure, they should get out there sooner, I would encourage them to do so. But what level of scrutiny or review that would receive, we can't comment on that.
I know in the past, comment letters from the SEC were very useful in, you had a question, you go back through, you kind of do some investigation. Are comment letters going to be in an available area that can be easily searched or found to help? Or do comment letters, are they confidential back to the other company?
So while the comment process is going on, that's a confidential process.
Right.
Once it's concluded, we publish those letters,
You will continue.
and we will continue to do so. You bring up an interesting point. That there's can be significant value in looking at those comment letters and the responses, seeing some of the things we've asked about, seeing what companies said in response. But I would caution, this is something when I'm speaking in different audiences, this is something I focus on. Registrants need to be very careful about the message they take away from any particular correspondence for someone that's not them. We'll write a comment and we'll get a response. It's not necessarily clear what aspect of the response was persuasive for us. There are cases where much of a response is not persuasive, but some small element of it might be sufficient to satisfy our concern. There are any number of reasons why we might accept a response or decide to no longer pursue an issue and close the review. So it's important not to read too much into that comment and response process. It's very much tailored to a specific set of facts and patterns that exist for a company at a point in time. And to the extent that it's a different point in time or a different company, those facts and circumstances may not exist or may not apply. It's real important to keep that in mind. We run across problems that come from that more often than I'd like.
And if I can just make an observation in the context of in Europe dealing with our equivalent regulators in Europe, ESMA, when they were going through this process of changing their requirements for disclosure, it was not a to and fro between the minerals industry and the regulator. And then when the new guidelines came into force, it was kind of similar. There was a lot of feeling around the topic, that the regulator would make comments, but was also receiving the comments back from the industry in the form of questions, which helped identify the areas where perhaps additional guidance was needed or where there was uncertainty, where it wasn't so clear. It didn't change the guidelines, it didn't change the rulings, but it allowed both sides at least to figure out where are the grey areas, where are the uncertainties. And to your point exactly there, Brad, it's not a case of this response to this direct comment is the important point. It was in what context was that comment raised? Is it because you're making it 10 times? Maybe us as the industry side of trying to do this, that gives us an indication of perhaps when we're training in development or further guidance or updates to our reporting codes might help as well.
Yeah, absolutely. This will be, practice will develop in this area.
Yeah.
It's like anything else, and that's, so you have rules and you have interpretations, but then fundamentally you end up with practice. What does practice involve? And that will develop over time. And there are a variety of stakeholders that will have input into that. our role is certainly important, but others have equally important roles.
And one of the very specifics, and it was touched on today, materiality and confidentiality. And those, they're very hard to pin down and define exactly what you need. So they evolve through practice. What may be material for one company is not for another, even in the same sector.
Absolutely.
And those are the areas where, yeah, I'm completely on your side. If you try and pin down what you mean, everyone else is then trying to dodge around it. So I think, again, from experience, the perspective is you may get questions back from SEC as the regulator on those specific points until enough experience on all sides is gained to realize what that actually means.
Yeah, certainly. Speaking from my experience, I was directly involved in the oil and gas rulemaking previously, and in monitoring that and reviewing those filings as time has progressed. And the issues, the frequency of them, the nature of them has certainly changed over time. The engineering firms have gained understanding, the accounting firms have gained understanding, the lawyers have gained understanding, registrars. So a variety of people have to get their knowledge base developed, and that occurs over time.
One thing that we've battled with in Canada, we still do, is misconceptions that get out there. And people make stuff up, and that ends up being that, the SEC said this. Well, they didn't. It was just their interpretation, and all of a sudden that gets out, and that becomes the, what people think. Like the whole idea of compliance. We're still, this is a compliant 43101. There's no such thing as not a non-compliant 43101. You have to comply. It is compliance. That is it. So you take that off the table. So that's one thing that we as an industry need to make sure is when crap gets out there, we need to nip it at the bud when we can.
Just one question on practicality, speaking from an external consultant with SRK. Co-authoring reports and QPing and co-QPing. How is the SEC seeing that? Is it going to have to go in documentation under, if we submit a technical report under a lead head consultancy, like a lead firm with everything underneath? Or is the registrar able to file that with just QPs representing each of their individual sections? Is that something you can answer in the forum?
So the question, if I summarize it correctly, is if you have multiple QPs in a report, is there a lead QP, or is each QP on that together? Is that a fair summary of it? With that as the question, I'm going to ask Ken or John if they want to speak to that. I'm not qualified to speak to that.
Yeah, I think that is a question we would prefer if you would just call us and we can talk about it. We have had that question before. I can say specifically in the rule, multiple QPs are permissible. There's no limit on the number of QPs in a technical report. But in regard to your specific question, I think just give us a call and we can get you a specific answer. Okay.
This is a question from those attending in Webland, but the question is along the lines of a QP. Here in the United States, the SME has the registered member designation, which is a recognized professional organization. The question that one of our web attendees posed is are other registrations by U.S. state boards, such as professional boards of engineering or geologist boards, or are the individual state designations sufficient as a QP requirement under the SK-1300?
The individual state boards of engineering and geology pretty much have the requirements that meet what we're calling for. The key issue that will come up is do the individual states have the desire to discipline the members? Again, many cases this depends on the Attorney General. We have looked at several states. Many states will discipline members for actions outside the state lines. Some states decline, not because they have the jurisdiction, but because the Attorney General doesn't want to be bothered. Unfortunately, at that point, they would not qualify.
Is there a list of which states are and are not?
So the question is there a list of which states are and are not? If I could answer that, I think the short answer is no. It's
and maybe just to expound that a bit, the rule specifies what's required, and that you have to comply with what the rule says. And some will and some won't, and that's not going to be modified through any interpretive guidance that I can foresee. That requirement is important, and it's going to stay there, as far as I can tell.
Just a casual observation on that, you'll notice that there's no state boards, United States state professional bodies on the list of recognised professional organisations under the Australian JORC ASX list, precisely because of that reason. We don't know which ones will act outside state borders or even in state borders, whereas the Canadian professional bodies are.
Yeah, so the comment was that for the JORC code, the list of recognized professional organizations does not include state boards of engineering or other occupations, for the same reason that there's no guarantee that they will actually discipline its members.
Real specific question. Ken, you mentioned that, I think, if I understood it right, you can't use inferred PFSA studies.
You cannot use inferred resources in a preliminary feasibility study.
If that PFS study is supporting a resource declaration, that would be okay. It's just when it's supporting a reserve declaration.
That's correct.
Okay.
Okay, seeing that there are no. Oh.
So close.
Company is doing a feasibility or a pre-feasibility study, whether they can attribute value to inferred resources to develop a pit shell or a mining limit, if you will, even though they may decide that when they're doing their production schedule or their cash flows, they are not going to attribute value to those inferred resources. What's your position on that?
Do you want to answer?
Can you tell us again, Harry?
Richard, can you just go to the mic and repeat the question?
Yeah, okay.
Can you go beforehand the mic here?
All right, I can come up there. There are some deposits with a large amount of inferred resources, or even a small amount, where a company will say, I intend to eventually convert those inferred resources to indicated or measured or whatever, but my long-range mine plan is going to basically incorporate those resources. So they design a pit shell or a whole huge stope block to incorporate that material, and then they go back and do their feasibility study and do their cash flows, and at the time they do the production schedule and the cash flows, they do not attribute value to those inferred resources.
So the pit shell may be much more smaller, much bigger, or maybe slightly bigger.
Yes.
But in the cash flow, it's not there. Is that permissible?
In that case, only the measured, under the new rules, only the measured and indicated resources can be converted to
Correct.
reserves.
Right.
And the cash flow analysis could only include.
Okay, yes. As long as it's treated as waste, you're okay.
Correct. Yes.
But the initial process using the inferred resources, I'd have to think on this, but I think that would be permissible.
But then you'll have measured and indicated blocks supported by inferred blocks, generally, say, at the base of the stope, at the base of the pit, that are actually carrying, by definition, by carrying value, because that's what the pit shell is taking. So even though you've set them to waste, they're still influencing what you're categorizing above.
That is correct. That's why we'd have to think on this a little bit more. It's not, however, I would be inclined to look at that as a possibility.
Yeah, assuming the cash flow is positive.
Again, the cash is king.
Right, based on the measured and indicated resources.
Right. For
Yes.
point of clarification information, we got that same answer from the Ontario Securities Commission.
Great minds think alike.
I want to ask one question, Ken. When you were Ian's question earlier in relation to the PFS on resources, can a PFS by definition be used for resources, or is it only an initial assessment? I'm just confused with the terminology. So can I call something a PFS if I don't declare reserves at the end of it?
The initial assessment just provides a basis demonstrating that the resources have an economic potential. It is a lower grade study than a pre-feasibility study. It would be roughly equivalent to a scoping study. And again, as I start going into these definitions, the legal eagles will tear me up. So you just bear with me. This is all just very general, high level. So the initial assessment is very low quality, very low level of accuracy, and that is sufficient for resources. A preliminary feasibility study is the hurdle that must be cleared to get to a reserve declaration. And the resources that go with it should be at the same level of a pre-feasibility study.
Do I have to declare reserves as a PFS? So can I do all of the work surrounding this? So the example I'm thinking of is some of the jurisdictions where you had fairly massive royalty imposts coming in from the government, and it's unclear whether you're going to hit the 10% or an 8%, wild exaggeration, but like that. So if I do all of my study at a level that I think is commensurate and meets all of your definitions of PFS, but I decide at the last minute that I'm not going to declare reserves because I've got this one hurdle related to taxation, may I still call it a PFS? I probably asked too much.
No, it's...
We want to think about that. If you're confronted with that, that's a question you should ask. Okay.
That's one that we would really like to think about rather than answer on the spot.
This is kind of a helpful discussion because as we get in, these are the types of specific implementation questions that we would love to see. I'm confronted with this fact pattern. How do I think about it? Because these are very fact specific. It requires some thought from us. Hey, we didn't think about that question before. We've not thought it through. What are the implications of an answer one way or the other? And these might be the types of things that you have that question and several other people have the same question. We realize, hey, we should put some guidance out that clarifies this so people can think about those types of things. So good question, more detailed than we should answer now, but absolutely you should feel free about submitting something like that.
There's another sort of gray area which is becoming more and more important in the industry, and that is the modifying factors regarding environmental and permitting, sustainability, social license. In the past, I think most competent persons have said if there's a process in place to get a permit and it looks like you can satisfy those conditions, and there's a reasonable expectation that you will get your permit, then yes, you can put it in your pre-feasibility study and put it in a reserve. But if you don't have that level of confidence or the conditions aren't there to get a permit, you don't. Is that your feeling now, or has it changed?
Bear with us as we move the mic back and forth. As far as I know, that has not changed, Harry. We've still, if you have every expectation that you will receive the permit and there is no reasonable reason the permit would be denied, then you can include that. Obviously, for example, if you were building a mine in a wilderness area in the U.S., that would be very unreasonable to expect success with that endeavor.
It's something that we in CRIRSCO are wrestling with right now, because we see the importance of environmental and social license and all these modifying factors. It's gaining a lot more importance in evaluating a project and conveying to the investor what the risks are than perhaps previously. In particular, in some of these ones near wilderness areas, well, are you going to have to wait 20 years? You know, can you get it within 10? What's the timeline?
It's very difficult to define the timeline with all these environmental constraints that we have. I worked on a project many years ago. We had a 2-year timeline. That was wonderful until Clinton pulled the operating permits and told us to start over. It took us another 2 years. 4 years is nothing compared to the delays we have today. 10 to 15 years is unfortunately common. And it's very difficult at the early stage to say that you will have reasonable expectations of receiving the permit, or there's a high level of risk at that point. At this stage, the best advice I can give anybody: throw in additional disclosure, explain the entire process. The more disclosure clarifies the situation for the investor, it clarifies it for us, and it makes the attorneys happy because they have more billable hours.
Thank you.
Okay, with that, I see no other questions.
May I make one final?
We're not done yet.
We are.
Okay.
On behalf of the SME and the Resource and Reserve Committee, hope you will permit us to include at least Ken and Brad in our correspondence, and we would welcome your participation at whatever level. If you want to come to our meetings and listen just to hear what's being said, you are more than welcome to do so. If you want to participate in our phone calls, you are more than welcome to do so, but we would invite your participation and coordination with us so that you are hearing what we are hearing.
With that, I want to thank the SEC for attending this meeting. It's been a pleasure. I think we've learned a lot. So with that, round of applause. And this concludes our workshop and our webinar. Thank you.